Did you know that there's a very simple method that you can use to catch a trend right from the beginning? Yes, I'm talking about buying from the bottom and selling right at the top. For example, like in this trade, in this video, I'm going to show you the simplest way that you can catch a trend reversal right from the beginning without any indicators or any complex terms. So if you're interested in a subject matter like this, make sure you watch this video right to the end. I'm also going to be sharing with you a free guide that you'll be using throughout your journey. So without wasting much time, let's jump right in. Now, before you can do this very simple method, okay, and I'm going to show you how efficient or how effective this method is. Let me show you two concepts or two things that you need to pay attention to. So the first thing you need to pay attention to is your higher time frame movements. So higher time frame movements. This is where you are going to spot the trend reversals that will enable you to trade trends right from the beginning. Then the second thing that you have to look at is lower time frame trends. So the lower time frame trends. Lower. Now this is where your entry is going to be coming from most of the times. Okay, so you have these two concepts right down here. So what you want to look at is basic market structure, which I think you know already. So on a higher time frame movement, for bullish examples, when price is making an uptrend, it does two things, or it needs to do only two things. And so I'm going to show you these two things. So the first thing that price has to do is that price has to respect support levels. So these are the things that you need to pay attention to. So if I move this here, price has to respect. Now price also has to break resistance levels. If it is moving in an uptrend, break resistance levels. So price has to what? Break resistance levels like this. This signifies a very strong uptrend. However, at any point in time, if price fails to break a resistance level and makes a lower high and it breaks a support level, this is where you can take your entry from. When price is breaking the support level, your stop loss goes to the lower high. Your TP is literally a trend. Now you can do this on a demo account just to be sure of what I'm talking about. This is very efficient, and this is how simple it looks like, or this is how simple it is. Now if you're still skeptical, or if you are still doubting this methodology, let me show you another way in which you can actually increase your win rate with this strategy. So if you think price will not trend directly, what you can do is that you can wait for a lower high. So let's look at this. Price gives you an indication. Remember, price doesn't break support level. So when it breaks a support level, this is indicating a trend reversal. You wait for some sort of correction, which can sometimes be in this zone, and then you take your entry when price is going back down here. So in this case, you take shots here from here. Okay, you take shots from here, your stop loss goes here, and then your take profit comes down, or you ride a trend. Now sometimes price doesn't come back right at this level. Okay, sometimes price corrects to this level. Now this brings us to our lower time frame mode of entry. So the lower time frame is going to enable that you still don't miss this trade if price doesn't go back below or above this support or resistance level, in the case for sells. So let's look at the lower time frame movements for a minute. So for the lower time frame movement, you can also choose to take a lower time frame movement if price comes back at this level. And what that will do is that it's going to give you a very high risk reward because you are taking a lower time frame stop loss. So let's see how that looks like. So for the sake of this example, I'm just going to price action from the indication to the correction and then the continuation. So pay attention to this. So for the indication, price is going to be making lower highs and lower lows. On the higher time frame, it doesn't look like much, but on the lower time frame, it looks like an actual trend. So price is going to be making lower highs and lower lows, breaking support levels. Until price fails to break a support level and breaks a resistance level that it has been respecting. Now, when price breaks a resistance level and it makes a higher low, okay, then price starts correcting. So let me shift this here so that you can see this clearly. Now, at any point in time, if price is correcting and it fails to make a new high, and then it goes back to break a support level, which is the continuation or the continuation phase, this is where the entry comes from. So you take an entry here, your stop loss goes here, and then the TP is literally a trend. So price will either do this, or sometimes instead of failing to break the resistance level, it will actually break the resistance level and then to break a support level. So your entry comes from when price makes a lower high again. So you have to wait for a lower high after price breaks the support level. If price initially broke a resistance level, then you take your entry when price is going back down below that level here. So let me stretch this. So this is as simple as it is, or this is very simple. If it looks too simple for you to believe it, you can just use a demo account to practice with this until you actually get comfortable trading this very efficient method. So let's look at uptrend or downtrend examples in this case. So we looked at uptrend examples. So for downtrend examples or uptrend reversals, okay, when price is moving in the downtrend, normally what does it do? It respects its resistance levels and breaks support levels. As you can see here, it breaks support levels, respects resistance levels. So at any point in time, if price breaks a resistance level after failing to break a support, which it usually does, this indicates a trend reversal. So you want to wait for your correction, and then your entry comes from when price is moving up. This is the best way that you can do this. So let's see this. This is the best way that you can achieve this. So let me adjust this. This is your TP. However, if price doesn't come back below this, or you want a lower time frame entry for a higher risk reward, sometimes price can still come back below this, but you still want a lower time frame entry or lower time frame stop loss, you can also use this method. So I'm going to model this indication, this correction and continuation. So the indication is going to look like an uptrend on the lower time frame. Price is going to be making supports and breaking resistance levels, making supports, breaking resistance levels, basically making higher highs and higher lows. So when price makes a higher low at any point in time and it fails to break a resistance level, it's going to make a lower high. Then when it breaks the support level, it's going to make a lower high again, then starts correcting. This time it's going to be breaking support levels and respecting resistance levels. So price is going to be moving like this. So at any point in time, if price breaks a resistance level that has been respected, makes a lower high, your entry comes from when price is going above. So let's see this going above here, like this. Now, if you are really confused, or you are still confused about the entry types that you can get in this video, you watch this video that pops up here. Also, I made a free guide for you that shows you how you do everything step by step, and this guide is going to be in the description, so make sure you check it out. It's 100% free. So now let's look at actual examples of how this will look like in a row chart. So let's go ahead and flip this, and then let's get rid of this, refresh our chart. So when we come back to the example that I showed you here, this is Monday this week of price, or last week by the time this video comes out. So you can see that price kept respecting its resistance levels right from the beginning here. Okay, price kept respecting resistance levels. Price kept respecting resistance levels. So if I bring this here, you're going to see that price was respecting its resistance levels, respecting resistance levels, respecting resistance levels, respecting resistance. until price broke a resistance level here. Now this is going to be your indication that price is going to move up. Now you can see that for this specific example, price didn't come back below this level for you to take your entry. So this is where you make use of the lower time frame entry model. So let's go to the 5 minutes and let's see how this looks like. So let's see. So we are on the 5 minutes time frame. Now you can see that the indication began right from here. So we are going to be marking our support levels right from that side. So you can see that this is a support level. So let me use rectangles to show you. So support level, right? And you can see that price made another support or made another support level here without breaking. Price made another support level here. Price makes another support level. So you can see that price doesn't break support levels, but it breaks resistance levels. You can see that price broke this resistance level, broke this resistance level, broke this resistance level, broke this resistance level. Now you can see that when price broke the support level, it gave a lower high right here. So it stopped breaking what? The resistance levels. This is the correction phase. So the correction begins when price what? Makes a higher low. You can see that price failed to make a new high, broke the support level, made a lower high, then price failed to continue. So this is relatively a very small correction. Sometimes the correction can take long, sometimes it can take a very short amount of time, like this example, which is something you should pay attention to. Don't bring expectations into the market. So you go with what price gives you. So you can see that for this entry model, you can see that when price gave us this low here, it gave us this low here, this support level. And before I actually show you the entry, let's go over how the correction looks like on the higher time frame. So for the indication or for uptrend examples, I showed you that price will be making higher highs and higher lows, higher highs and higher lows, and then it will fail to make a new high. Then this is the correction phase. Okay, so you can see that for this, price ended the correction right here, and I showed you that price is going to fail to break down, and then it will break the resistance level. This is where our entry comes from. So as you can see, this exactly looks like what price did here. So you can see that when price broke this, made a lower high, didn't make a new low, made a kind of equal high, but it's give you a higher low. So what you want to do is that you mark here and you put an alert there. Immediately price starts spamming your alerts. This is where your entry comes from. So you take your entry and then your TP becomes a trend. This is how simple it is. No indicator, no complex jargons or any confusing statements. So let's go back to the higher time frame. Now, before I go back to the higher time frame, in case you want to add more positions, you can wait for price to correct. So this is another indication. You can wait for price to correct on a higher time frame. So you can see that when price made this support level, then it broke the support, started correcting, making lower highs and lower lows, made this resistance level, then price failed to continue downward, and then it broke this. So your entry can come from here again. Stop loss goes below this. You can take another position here, as you can see, and this is where things get interesting. So when I come back to the 1 hour time frame, look at this. It literally looks like a very good trend that you can take here. So this is where your first entry came from. This is your first entry. So let me get rid of this. Your entry was actually quite here, if you can see it. Okay, let's stretch this. I'll probably just make another one. So you can see that the entry was right from that point, right from this point here. So this was our first entry, and we're targeting up. So you can see that this was the first entry, this was the second entry that you can take. Now for your stop loss, when price is making this higher time frame higher lows, as you can see, price is also moving in a trend. on a higher time frame. What you can do is you can put stop losses at these higher lows. So when price takes you out, it means that a trend reversal is looking to come on. You can see that immediately price broke this, and you can see that when price broke this support level, it's probably made a lower high and then it sold off. So this is how trend reversals work. You can see that also when price broke this higher time frame, resistance level, it's made a higher low and then it's reversed from there. So this method works a lot, and it's very surprising how well it works. Now let me show you an example on gold so that you can see that this could work on a lot of pairs. So let's go to gold and let me show you an example. Let me go back here. Let me come here. Let's go to, okay, so I don't have gold here. So let's come here, XAUSD. So let's come to the gold market. Now there's a very interesting example right from here. So you can see that when gold was in a downtrend from here, it was making resistance levels that it was respecting. Okay, so resistance level, then resistance level respected, resistance level respected, resistance level respected, resistance level respected. Then price broke this resistance level here. So when price breaks this resistance level, you go to the lower time frame. So let's go to the lower time frame, 5 minutes time frame. Okay, let's go to the 5 minutes time frame. So with the 5 minutes time frame, we are just going to go back to that point. So this is not the point. Let's just go back. Okay, so you can see that this is that point. This is that point here. So as you can see, the indication began right from this point. Now when price gave you this indication, you can see that this is the support level here, and price just kept going until it made another support level here, right here. So this was the support level here. So this is the support level price made, and it broke again. You can see that price finally broke the support level, and it made a lower high. So this is the correction phase now. This is the correction phase now. So you can see the correction phase. Price made a lower high, lower low, lower high, equal low. So you can see that price kept respecting what? Its resistance levels. This resistance level. So for here, when price broke above this was the indication that price is what is going to go back bullish. So at this point in time, normally your alerts will be sitting right here. So normally you have an alert right here, so that when price comes back, so if you use an area, you're also going to see clearly here. So you can see that when price broke the resistance level, it gave a higher low. So your entry comes from when price is going back up here. So for this, you can use this stop loss, or you can use this stop loss, whichever one works. You can use this stop loss or this stop loss, and then your continuation or your target is going to be a trend. So when we go back to the higher time frame, let's go back to the higher time frame. Let's make this a little bit bigger. Go back to the 1 hour time frame. So you can see that price changed trends right from here, and this would have been a very good trade overall. So it probably might have ended right here, because this is a support level, and this is where price might have taken you out, because your stop loss, you can put your stop loss at support levels when price is making or going back. Normally when price breaks, this might indicate that price wants to change trends. So you can see for yourself how effective this method actually is. So if you have any questions, make sure you put them down in the comments. You can also check the link in the description for the free guide that you can use to navigate your way around this sort of strategy. See you in the next one.